Hey guys, Ashleigh Yates here, your local realtor in Castle Rock, and I am here again with Jimmy Kinley, mortgage lender. And today we're going to be talking about rate buy downs and just kind of going over the ins and outs of what a rate buy down is. And Jimmy, I will let you take it from here.
Right on. Well, thanks for having me. A temporary buy down is something that isn't always available. It's something that we don't see when the market's hot, but when the market kind of levels off and buyers can get seller concessions, it's something that comes comes alive somewhat when the market's not crazy hot, and it's a great option, especially for buyers these days trying to buy a house. But a lot of their drawback is the fact that the rates are higher and the payments are higher. And I think a lot of us agree that rates are going to go back down at some point, and where they might be able to refinance. So this 2-1 buy down kind of creates a nice break in the payment, and it's something that the sellers can offer the buyers, and the buyers can take advantage of it. So I pulled up a little sheet that I've created that is set up for a 550 single family home with 5% down and a 522 500 loan amount, with a rate of 6.875, give or take. Rates are a little bit better than that today, but it's in that ballpark. With a monthly payment of 34.32 for the principal and interest. And what I want to do is I want to show you where this money, this so the 2-1 buy down is negotiated in the contract. So in
Because
our
it's
scenario,
seller credit, correct, right? Like
correct.
monies that's coming from the seller that we're going to negotiate.
Yes, you're going to write your offer and you're going to say, "Hey, we're giving you 550 for the house, but we want 12,000. Let's just say you ask for 500 in this case to cover the 2-1 buy down. You want $12,500 in concessions from the seller back to the buyer, that we're going to use $12,108 of it in this scenario to go into an escrow account, just like the same escrow account that would house their taxes and insurance. And that money is going to be distributed on a monthly basis over the next 2 years in a 2-1 buy down, to the tune of $667 a month for the first 12 months will come out of that escrow account, which will effectively lower it. Will, from the buyer's point of view, it is like their interest rate's 4.875 for the first year, which drops that principal and interest down that 667 a month. And for the second year, it's $342 a month cheaper. And the beauty is two things from the buyer's point of view. One, this is still a fixed rate mortgage. I want to make that clear. It is not adjustable rate. Their rate is always, in this scenario, 6.875. They're just taking advantage of the seller concessions to effectively reduce the rate 2% for the first year, 1% for the second. There's a couple of things I want to point out that are much different than a permanent rate buy down. So let's say that I call up a buyer, a year down the road, a year after closing, and they had this 12 grand that went into their escrow account, and it's only paid out 8 grand over, this first year, but rates are now 5.625, and I want to refinance them.
Hmm.
When you do a permanent buy down, there's a recuperation time to getting that money back, but this is their money. So effectively, let's say I go to refinance them, there's still 4 grand left in their escrow account from this, seller concessions. Now they're essentially using that money to pay for their refinance, and whatever's left over, it just reduces how much they owe on the house or on the loan.
Oh, great.
So they never lose that money. In fact, if they paid the loan off 6 months after closing, whatever the balance is of the escrow they didn't use would go back to them.
Okay.
Which brings up a good point. If you compare that same money from a temporary buy down to a permanent buy down, what you'll realize is it takes 3.5 to 4 years to recuperate the cost of a permanent buy down. And if you're in a situation where you think that the rates are going to go down at some point, you're going to get to refinance, and you spend 12 grand to, lower your interest rate, and you refinance in 2 years, you literally only recuperated 6 grand of that back. So the permanent buy down runs the risk of losing it, where the Temporary buy down, it's your money no matter what.
That's great.
You use it all up until it runs out, and if you do something before then, you get your money back. But this is really helping buyers feel comfortable with that payment jump. We still make sure they qualify for the full thing.
Hmm.
So it is just giving them the warm fuzzy to, hey, let me get in the home without that sticker shock being so eye opening out of the gate.
And I would clarify, you definitely want to go into this budgeting for your 6.85, that 3432, and
Absolutely.
hopefully you can refi, but you want to be able to afford that payment and not
And
just,
this is not like the subprime days of old where we're not making sure
yeah.
they have to qualify off the full payment. This is literally not even something that goes into the underwriting process, the reduced payment for the first year. We
Okay.
underwrite the loan like it's the full payment, like we would on anything else. This is just a benefit that all happens within their escrow account and the negotiation of the contract.
Great. And I personally am familiar with the buy downs. I have had buyers offer and ask for one. I've had sellers who've used this as a marketing strategy. And personally, I find there to be more financial benefit to the buyer doing a buy down than just a price reduction. From my point of view as the realtor, I struggle with the marketability of it through the MLS as far as like, every time someone does a price reduction, it gets shot through the MLS as if it's a new listing and an update. And so I wish that there was something like that for buy downs or concessions that are being offered to
That
market,
would be great.
because really we only have in our private remarks in the listing. And of course, we're calling and, advocating for our client that we're willing to offer it. But I wish there was more marketability on it because I think there's a lot of people out there who just don't understand it and don't know what it is.
Sure. And some people hear temporary and think it's adjustable rates or something like that. It's not. It's something in a market that we're in at the moment, and you know how fast that changes. I mean, when the market gets competitive, these seller concessions and negotiations go away. But right now, even from a seller's point of view, I mean, if you kind of look over my chart over here, for the seller to sell their house at a price point that would be an equivalent payment to the buyer, the seller would have to literally, for that first year, it'd be over 100 grand
Mhm.
um, cheaper, and 50 grand for the second to even compare to that same payment. Um, so, from a seller's point of view, they're giving a buyer in this scenario, very likely a first time home buyer that is increasing their payment from renting to owning. They're
Mhm.
giving them a step in to make
Yeah,
it feel more comfortable. Every mortgage payment I ever took on in my life, I thought, you're crazy. This is too much. And then, 6 months later, you forget about it because it's just part of your bills.
yeah,
But it's helping those buyers get over the hurdle of increasing their payment to get into that home.
definitely. I saw this morning, it was so funny. I knew we planned to have a chat about this today, but I got an email that came through from I forget where, but it had a statistic from NAR. So it said National Association of Realtors noted that one out of every four home sales last year had a seller concession of some sort. So that's approximately 24%, which isn't a ton, but I know I didn't see concessions between 2017 and 2022. And then all of a sudden, when things started to balance, a lot of concessions are happening.
For sure. And what we see is through the volume months of the year, they may not be there.
Yeah.
Even in our new normal market, everybody thinks rates are supposed to be 3. They're not. We're the average for a 30-year fixed mortgage since recorded is 7.8. We're a percentage point below that. But even in this new normal market, you know the the there are parts of the year where they're super competitive. So, if you want to get the 2-1 buy down as a buyer, you really need to be buying when everybody else is not trying to buy.
Amen. Buy in the off season.
And when
And
everybody else doesn't
slow.
want to, for sure.
Awesome. Well, I really appreciate it, Jimmy. Thank you so much. And I love this chart that you created. It really breaks everything down. Um, and if anyone has any questions, directly from Jimmy. I will have his contact information below the video, and feel free to reach out to either of us with any questions.
Thanks for having me.
All right, talk soon.
Thank you. Bye bye.